Rick is standing by at the CME in Chicago. Rick, the numbers, please.
Yes, our December read for the Producer Price Index, the wholesale side of inflation, expecting a headline number up 0.4, cut it in half, up 0.2, much lower than expected. It equals where we were in September. To find a lower number, you're going to July of last year when it was unchanged. You strip out food and energy, also on the cool side, unchanged. We're expecting a number closer to up 0.3. Unchanged. You have to go back to July of last year again to get a lower number at -0.1. Now, if we look at ex-food, energy, and trade, up 0.1, less than the 0.3 expected. You have to go back quite a ways. You're going all the way back on 0.1 to equal November of last year, September of last year, but to find a lower number, you have to go all the way back to May of 23. May of 23. Now, take a step back. We're going to do the year-over-year numbers. Year-over-year headline or final demand expected up close to 3.8. It comes in at 3.5. 3.5, though, in this case, it follows 3%, and it is definitely 3.3 is a little warmer than the rear view mirror, even though it's less than expectations. 3.5, I'm going back to February of last year when it was 4.7. We've had many lower numbers since. If you look at ex-food energy, we are now at 3.5. Once again, less than expected, but hotter than the rear view mirror. Last month was 3.4. To find a 3.5 or higher, you're going back to February of 23. And finally, ex-food, energy, and trade, up 3.3. This one is the only year-over-year number that's sequentially lower than our last look, which was 3.5. 3.3 equals September of 24, going back to April of 24 to find a lower number, 3.2. So the year-over-year were a bit problematic. Very nice gains on the month-over-month, which is definitely reflected in yield drops. We're at 479 in a 10. We're now at 475. That's down 3 on the session. And when we were at the highs, and actually still right now at this level, should we close here, once again, you're comping back to the Halloween of 2023 on both 10s and 30s. Dollar index yesterday, Joe, it touched over 110 briefly. We'll have to monitor its weakness here based on the numbers we're seeing pushing interest rates down. And there has been a last-minute revision I'm catching, and maybe there'll be some more trickling in. But the ex-food and energy year-over-year, our last look of 3.4 gets upgraded to 3.5, equaling the current look. Pre-opening equities certainly did love this, and it really goes a long way to explain one of the issues that equities have been bugged by, and that, of course, is higher interest rates. Joe, back to you.